Good morning, it's Jeffrey Cohen. It's Tuesday, January 21st. Hopefully everyone had a safe and fun long weekend. Celebrated Juneteenth. If you're not from the U.S., Juneteenth was the day that the United States ended slavery as an official institution. And so we celebrate that as being freedom for everyone. And we hope everyone in the entire world will see freedom, democracy, capitalism, and the American way of life. And we are hoping to set the kind of example that the world can be proud of. And so let's just talk a little bit about what we saw. So last night we spent a few hours. This morning we've already been up very early, spending a few hours. Should we buy stocks today? That's the theme. Should today be a green day where everyone gets all excited and makes acquisitions, or is this a red day? So we're wearing a red shirt because we think this is probably a red day, but the market is speaking otherwise. And so let's talk through some of the conflict or contradiction. So if I start off with one of the simple things we look at, and you know what, there's a blog post. It's chicagoquantum.com. You go into our website, you look at research, which is one of our menu items, and you look at today's insights. By the way, this is all free. We do have a subscription service, and as it takes off, we may start to restrict some of our content. But for right now, everything's free for everyone. So you click on today's insight, and there it is. And we talk a lot about what we're doing, what we're seeing. In fact, we updated it last night. Okay, so what are you going to do on Tuesday? And then we updated it this morning. So we're trying to share with you what we're thinking. It's a real head scratcher today. First thing is, on the red side would be Treasury yields. Treasury yields are up 3.3% for the 10-year. Almost 3.3.5% for the 30-year. So it's higher. Okay, not a lot higher, but as interest rates go up, that is not the kind of thing that you want when you're looking to invest in stocks. The 1-month Treasury, 1.16. It looks like that's high too. And let me explain why that is. So I'm going to shut that down. In our model, we use different data to figure out what our expected return for the next year is going to look like. So this is a little bit inside baseball, but I'll share it with you. We look at the NASDAQ, we look at the Russell, we look at the S&P 500, and we figure out have they delivered a return or not. So the S&P 500's actual return, it's actually lost 12.1%. Now it's paid a 1% dividend, so figure it's down 11% for the year on a total basis. The Russell's down 26.5%, pays a very tiny dividend. It's probably still down 26%. And the QQQ, as you can see, is down 20%, pays about a 1% dividend, so figure you're down 19%. That is a declining market. And our risk-free rate has been taken up to 1.5%. So, and the reason is that, if treasuries are delivering almost 1.2, usually there's a couple of banks out there that if you put your money in a money market, they give you better than 30-day treasury. And so 1.5 is probably not unreasonable for somebody to get from savings. We also take a look at the variance of the S&P 500 and the variance of the overall market. That variance continues to tick higher. It's hard to know because unless you kind of watch the show every week, but the S&P variance used to be 0.0009. So 10 to the negative fifth, 9.0 times 10 to the negative fifth. Now it's 1.5, solid 1.5 times 10 to the negative fourth. So the variance of the S&P 500 continues to rise. Now that's not generally good, especially the S&P 500 is delivering negative returns. So not only are you losing money, but you're not sleeping at night. So that's interesting. That's a little bit of, again, what I call inside baseball. So let's take a look at the data and let's just walk through. It's a pretty fast read. So first off, if you think we're in a recession, you want to sell stocks. You do. So the S&P 500 does not do well in a recession. And the reason is that the market's falling. The economy's falling. And so why would you want to be in the market during a recession? You want to avoid recessions. 2002, 2003, there's 2008, 2012 to 13. I mean, it doesn't matter in a way because the market kept going up. But anytime there's weakness in the market, it's actually better to sell high and then come back and buy low. If you do that, you juice your returns. Like if you would have sold up here at like 4,500 and bought back at, I don't know what we're going to get to, 3,000, you're making good money, right? You're making it twice. You made it first time it went up, and then you make it second time when it goes up. And so if you can do it, that's great. If you can figure out when the recessions are and avoid them. So what we're suggesting is it's game theory. If you structure it right, there's a solution. Game theory suggests that the markets are falling precisely because we are in a recession and you don't know it yet. Okay, so option one, we're in a recession. It's hard to know. I mean, I was out with the family and the restaurants were pretty busy. The museum was pretty busy. But then again, we were in downtown Chicago, and although there were a lot of people walking around, very few people were buying. Looks like there were a lot of window shoppers, right? Not a lot of purchases. And in fact, gas is still quite high. We had a family member tell us how stressed they were because they're out of money and they're working really hard at new economy jobs. Think Uber driver, although that's not exactly what it is. And they can't make ends meet. They got an car insurance payment every month. They've got to buy gas. They've got to buy food, and it down to zero. Living on fumes, right? And so, okay. So the game theory says if we're in a recession, stocks drop. Do you sell your stocks now? So if you sell them after recession is confirmed, stock prices are already really low. If nobody sells the stocks, the prices stay high. If everybody sells the stocks, the prices are very, very low. But if only you sell the stocks and everybody else holds them, then you sell high and everyone else gets screwed. So in that game theory, you want to be the first to sell. And the reason is because you want to sell everything that's not nailed down before prices fall. So markets are down over the past year. Comparables are tough. You see that here, right? Comparables are tough. The risk-free rate. If you see that 1 month rate come up to 1.5, 1.6, that's going to raise the risk-free rate. And what that effectively does is reduce your market return. So any of those big people out there, money managers, investment managers, portfolio optimizers that look at markets and market returns will lower their market return every time the interest rate goes up. Now, we don't use long-term money. We use short-term money because most people can look at it that way, right? Can invest their money short-term. So even we feel tight financially. You know what else went up for us? Property taxes. I'd love to show you my property taxes. They're up like $2,000 this year. I didn't have an extra $2,000 in income to put towards it. Insurance went up through the roof. home, all that stuff. And so the question is the market going to go up? So our model really liked a certain stock. We added it to the model as a test, but it really likes it. Really, really likes it. And so it is the Direction Daily Small Cap Bull 3X shares. This is the purest shot of adrenaline you can get in this market. TNA. Write that down. TNA is pure return in excess of risk. It's efficient. It's more efficient than the S&P 500. Efficiency meaning risk versus return, cleanliness. On a net basis, not a ratio, but on an absolute, equalize and subtract. So, do you buy it? Now, if you look, lots of people ran a model over the weekend, and lots of people decided they're in. Pre-market, it's up almost 6% already. That implies that the S&P 500 will be up almost 2% already. And take a look. It's up in futures. It's up pre-market 1.7%. So it all works. Got it. Now, I didn't realize there was a TZA. I might have to add that one to our model. See how that one plays out. At least do it to capture a negative beta play, right? So you've got a bear, a 3 times bear, which is down almost 6%. So first off, why would you ever invest in crypto when you can invest in TNA and TZA? Guys, if you're out there, if you're like Bitcoin hounds or whale, we looked at whale coins, all the whale coins, 20 billion of them are worth like $4,600. It's awful. Like, why would you want to be in a currency that doesn't mean anything? You don't even get to move to whales if you buy it. And when you've got 6% moves, I mean, you might as well go to a casino. This is like casino returns, right? All right. That being aside, Jeffrey, tell us, what else did you see in the market? So the first thing you have to decide is, are we in a recession? We already see the interest rates going up, so we already see expected returns going down, but you could argue that the stock market's going to go way up if 6 months from now, earnings are going to be way up. The market really looks like 6 to 9 months into the future. So what do you think, Jeffrey? It's going to be December 21st, the night before Christmas. Market going to be better? Is the economy going to be better? Gas prices, gift giving, travel. Where are we, Jeffrey? So, and this is hard because when inflation was effectively zero, any growth was enough. And I appreciate that because I charge the same price. I charge a lot of money for my services, $750 a run, but it takes me a lot of my time. It could take as much as 10 hours to run the model and write the report. So you're getting my best thinking, you're getting it all the time, and you get it for $750. Now, I'm not going to raise the price to $800 because gas went up. So I want to see movement, right? I want to see real constant price growth. And so do you think that constant price growth is going to be 8 to 12% between now and Christmas? 10% more cars sold. What do you think? 10% more coffee drunk. 10% more hours worked. 10% more headphones. Shoes. Glasses. 10% more haircuts. What do you think? I don't think so. And I don't think everyone's going to raise their price 10% and then sell 10% more. So I'm looking everywhere. Social media, the news, small corners, anecdotes, downtown Chicago, right? So we heard that retailers bulked up on inventory that nobody wanted. That can't be helpful, right? So let's take a look at some specific factors. Now, this is where You just got to do the homework, right? So supply shortages and constraints are still out there. For example, flight delays and cancellations. There were more than 10,000 flight delays and cancellations between this past Friday and Sunday. Okay, that's a lot. And they're saying it's because there aren't enough pilots. My guess is if they had enough pilots, they would say there aren't enough airplanes. And if there were enough airplanes, they would say there's not enough gates in the airports. But for whatever reason, whatever the gating factor is, the airline can't deliver. Shipping in and out of LA, Los Angeles, California. Do you know imports, loaded containers, 20-foot equivalent units, are down 7% month on month? Wow, Christmas is coming. It's 6 months, and yet we're importing 7% fewer containers. First off, I love that because I'm like Mr. I Love America. But that's tricky, right? That's the whole world. Exports are up 14%. I'm loving that, right? Is this sustainable? What are we exporting? Anyway, food? Maybe. Maybe shipping our food out so other people are less hungry than us. I don't know. I don't know that we make a lot of things. Spoons? I mean, do we make the spoon? Yeah, we might make this spoon, but I don't think we're shipping it out in containers full. So housing and new construction and inventory building are all less profitable than they were given the rise in interest rates and energy if everything else were the same. So when your mortgage rate is 6.5%, you have to make that much more profit as you build something. Also, property taxes are up. Energy's up. It costs more to run a property. It costs more to make it function, right? So that's fine. And by the way, it probably also costs more to ship the things in. Labor's more expensive, which makes all the services industry things more expensive. So then we looked at other stuff, right? So what about copper? What about inputs? Well, copper prices are kissing $4 a pound, which is down. That's interesting because it says less manufacturing, less copper usage. Demand. COVID numbers are flat. That's interesting. I think they are actually flat. We're going to do it against hospital admissions for the United States. 7-day average. And you can see that the number of COVID cases pretty flat, like 100,000. It's down like 4% from last week. But new hospital admissions are still up at 4,300. So those who are getting COVID, in general, 4% are actually, it looks like, yeah, it's about 4.5% are hospitalized. Still pretty high number. And people are catching it second, third times. So what else, Jeffrey? What else? Okay. Inflation is up dramatically. You know that. Imported items from Asia and other countries with weak currencies will be artificially cheaper for Americans in the short term. So thankfully, the rest of the world is helping us to keep our sweet tooth, our sugar tooth, right? Our thirst for the demand for imports. Because I know China's keeping their currency weak. Japan is just slamming their currency to the ground and stepping on it. But I also noticed that Mexico, Brazil, and I think even Canada is a little bit weaker. So the countries that we buy from, weak currencies. So they're trying. They'd rather starve their own people than starve America of goods and services. So they're pulling the profit out of their own export industries. You know, governments and traders do this. Not the guy who owns a factory doesn't. He or she's a price taker when it comes to currencies. They just know at the end of the month they get less money. Automobile sales for new vehicles is low on a historic basis. Now, what about the stock market symbols? So Sunday night, the futures were up 1%. Now, look at that. The S&P 500 index future is up 1.7%. That's healthy. It's really healthy. U.S. bond futures are down from an eighth to a half. So bets on interest rates are up. Now I took it down. I'm going to bring it back. Let's just look at the 10-year. I got to make up a cool like William Gibson name for the 10-year Treasury note. The note that where everything happens, right? 3.3%. Not a shy rate at all. This rate's going up. Okay? That's negative. That's red, right? The price of U.S. stocks continues to fall, with stocks that have already fallen getting cheaper by the week. The number of new lows each day is in the hundreds, and in some cases, the number of new lows in fixed income is over 1,000 on the corporate level. Just want you to think about that. There are more than 1,000, there's 1,200 stocks that traded on Friday that reached, bonds that traded on Friday that reached new lows. Now, low is bad because low means higher interest rates to borrow. Now, you could be of two minds of this, right? Like, let's say, I mean, we shorted a vaya for like a week, so we know a lot about a vaya, right? So you would say, well, Jeffrey, I love it because if I want a vaya, when it hits a new low, I get something for it, right? I get more interest rate. When you look at a via holdings, you look at the 2023 bond. If I buy it now, it's junk. It's junk. They may not pay their debt, but if they do, between now and June of next year, I earned 16.3% interest rate. Holy cow. By the way, if Avaya happened to find $350 million in cash and their covenants would allow them, they could buy back their $350 million in debt at $877.50 per thousand. They make like $50 million in profit, right? Because they owe $350 and they can pay probably $300. Now, if you look at the 2028, it's a little more risky, right? It's a higher coupon. It's paying 6 1/8. This one is trading at 69 1/4, so $692.50 for every thousand. It's yielding 13.6%. Again, new lows means higher yields. Now, the way this affects Avaya isn't on the old bonds, it's the next bond. So Avaya has to restructure its June 2023 bond. The bank is going to say to it, look, the market tells me that you should be paying 16.25% interest. You know, I'm Wells Fargo. I'm U.S. Bank Corp. I'm going to be nice. I'll charge you 13% interest. Now, Avaya is thinking, oh my God, $350 million at 13% interest. I can't do it. Let me make it a convertible. So what they'll do is they'll throw some things in. I'll give you some warrants. I'll let you have some stock. I'll take covenants. Let's take that price down to 8-9%. But I'm going to pay you somehow. That's what happens. And so across the board, we see too many new lows, right? And what's interesting is it's not just it's not just new lows in the corporate markets. In agency debt, which includes mortgage-backed securities, you got 169 new lows, you got 8 new highs. And so there are segments of the mortgage-backed security market that are seeing new lows. And like we saw with Avaya, the price, the yield is higher. They're willing to pay less for the bonds. So what else? So new lows. Now let's take a look at Finviz. I don't actually know how to confirm this data without running a model, so I'm not going to. But just to show you, really zoom on in there. 25 new highs on Friday, which was not a bad day. Friday was looking pretty good. It was up. Friday was up. Look at that. But yet on an up day, there were 1,324 new lows, 25 new highs. There was 1,300 stocks hit a new low. So our saying to people, and in fact, just met with a lady this weekend, big money lady. She's like, Jeff, what should I do? I said, well, I wouldn't put my money in stocks right now because if they're down, they're probably going to go lower. Right? And so I would just stay the course. Wherever you are now, you probably stay the course. Got a nice house, keep your house. Don't sell it. Don't think you're going to go into Bitcoin. Oh my God, Bitcoin. Don't do any of that stuff. Just, you know what? So what we say is if you have good stocks that you like and you like the story of your stocks and they happen to be down 50%, put a few more bucks in them. It won't hurt you. Especially if you've got money to burn. Right? Don't do it with crypto, though. Look at that. Bitcoin's up to 21,000 again. You guys think it's going to go back to 30? Might. There's nothing behind it. It's just gambling. So let's get back to it. Credit quality. This is the truth stone in the market. Because if the U.S. consumer can't pay their bills and companies can't pay their bills, then banks and credit providing businesses will take losses and restrict credit at a time of higher interest rates, providing a double whammy. Only those with great credit can borrow, and it costs more to borrow. You're going to see this destroy large tranches of our economy if credit quality declines. So the thing that I would be looking for is anything that indicates credit quality is changing. Right now, one down too. Talked about Bitcoin, talked about currencies, the war. So what's interesting is China and the U.S. are having more tension about the Taiwan Strait. China says that it is not international waters and that U.S. ships will only be allowed to pass with prior permission, maybe even buying an admission ticket. My guess is the price would not be cheap and there'd be military aircraft flying over the U.S. ships. Of course, the U.S. believes that Taiwan is international waters. Russia and the Western world continue their fight in Ukraine, and Russia seems to be winning these days. So that's not helpful. So what are we going to do? I don't know. Still don't know. It's 6:55 in the morning, Chicago time. Got an hour and a half before opening. So what would we be looking for? So what kind of news would we be looking for, right? Other than credit quality, there could be rebalancing of portfolios going on. So the reason that people buy stocks during a bear market is because they have to. They're funds, they're fund managers, they're money managers. You can't just decide you're going to sit on the fence. If your job is to manage money, you manage money. And today is the first day after OPEX or options expiration. So this could be when people start to make new bets. We're going to print some more money. We're going to not print some more money. Commodities, currencies, and interest rates. Those things, they're softer, but they're interesting. Energy prices, right? If energy prices make a new leg higher, crypto and alternative investment movements. Got to watch those. And then there's always the technical factors in the market. I always say this seems like voodoo to me. It's a little bit like, I don't know if you ever saw the Fast and Furious movie, where Dom is trying to figure out how Letty ran off the road. She had an accident and she died and they buried her. Now, in truth, later movie, things changed. But in this case, you saw the skid marks. And so he came after the fact and he saw nitrous burn marks and he saw skid marks. And he goes, the car must have gone off to the right and it must have flipped over. And the car next to it must have been burning nitrous because she generally didn't burn nitrous. Therefore, it was a collision that was intentional by a racer. So after the fact, you look at the evidence and you try to piece together what happened. But in reality, I can't go out and look at the street in front of my house and figure out the last car that drove by. Maybe I can look at tollway information and see what happened a week ago, but it's really, or a day ago even, but it's really hard to do this real time. So let's walk through some quick and dirty things, and then I'm just going to say thank you because it's almost 7 o'clock. I don't have anything for you. This market looks like it wants to trade higher, so we're going to take a quick refresh here. Your TNA, which is 3 times bull, is now up 4 3/4. Your bear version of it is down 5.1. And so people are still betting the market's going to go higher. Your U.S. 10-year Treasury note it's fast approaching 3.3%. So interest rates are rising, making it more expensive to buy things. If we look at Cohen, is there any news? Germany is warning of a recession if Russian gas is cut off. The yen is down to 136, the lowest since 1998. And honestly, I think that is a way to keep their economy rolling, is to deflate the currency, pump money. And as long as it's only Japan, it doesn't really matter. Now, it's a dangerous game for Japan, but I don't know that it's going to do anything to the rest of the world. It's not going to affect my business. I don't do a lot of business in Japan. We look at the S&P, nothing really changed. We've already looked at corporates. On Friday, they were roughly even, but you have almost 1,200 new lows and 23 new highs. So bond yields that were low, bonds that were low, bond yields that were high, bad bonds, junk bonds, garbage bonds, they're more garbage than they were before. Lithuania blocking Russian goods that are subject to the sanctions to Kaliningrad. It's a big escalation, but it's only being consistent. It's only Europe being consistent with itself. It makes sense. A vaya going in the toilet? Sure. That's just stupid. So do me a favor. It's the summer. Don't leave your kids in the car, right? This was the Port of LA information. I just wanted you to know where we got it from. Port of LA runs a monthly, and you can see here loaded exports are up 14.33% month on month, and imports are they're down almost 7% month on month. All right, time to get my daughter up for camp. I hear her up. I love her. She's such a good kid. Great kid. I keep wanting to get her involved in the market. She's like, Dad, I'm so bored when you talk about stocks. It is boring. I don't want to do it. I'm like, come on, it's great. You get rich. She's like, I'd like to be rich someday, but not through trading stocks. So that's it. So Bitcoin up to 21,000. It's just, I don't know what to say. Futures, very green. Exceptionally green today. I do think it's a head fake. I just tell you to watch out. China junk bond sell-off. So remember we talked about credit quality? A credit quality disaster could also come out of China if you have U.S. banks lending to Chinese companies. I don't know that we have that yet, but it's probably worth some homework. That's a stupid thing. I didn't want to talk about it. This is interesting. UN food chief halves refugee meal rations. Are we really at the point where we're going to starve out our refugees in Africa? How many calories are we giving them? It doesn't say here, but they're saying that millions of people are marching towards starvation. You got pictures of kids that don't have enough to eat with short haircuts. And I don't know. You know what? I'd be interesting to it'd be interesting to see what kind of calories are they keeping them down to. It doesn't say. I mean, you can live on about 1,000 calories a day. I know during World War II, the Germans starved out Ukraine and Poland by limiting them to 750 calories a day. So I hope we're not getting to those levels. That's not a good thing. I went to that Hong Kong's floating restaurant. It sunk. So stupid. Why would they tow that from the city? It was a great restaurant. I went to that restaurant. R.I.P., man. So let's look at the indices, because that's always a fun thing to do. So where are we with the Jeff Cohen Chicago Quantum indices? So regional banks, to the extent that banks and regional banks traded, they're up. Okay. Money managers, to the extent that they traded, they're up. That's nice. So far we're hitting 100 here. Got a couple of retailers like Under Armour, Levi Strauss, Newell, TJ Maxx down. The rest looking good. In fact, your crypto, Grow Generation and Hydrofarm are up through the roof. Q-Rate Retail, which is pretty risky. That's QVC channel on the TV, is up. Crypto and miners, let's take a look. Cleveland Cliffs is up pre-market. That's nice. Freeport McMoran. BHP is down. It's probably something global. In general, your crypto is up. So I just feel like, let me just take a moment. If you're in crypto, if you're not a crypto person and you're investing in crypto, you're just going to lose all your money. There, I said it. All right, let's take a look at cannabis and tobacco. Two are down. So MSOS is down pre-market. That's the ETF. And our favorite stock and holding, Corbis, is down pre-market 5%, but the rest are up. So cannabis looks strong with tobacco. Chips and semiconductor, always a canary in the coal mine, 100% up, but small numbers. Trucking and transport, up. So market's got some breath. Market looks good. Maybe I should change to my green shirt, but for right now, we're staying red. We think this is a bit of a head fake. There's no real data, but the market is trading as if it's going to rise today. And so, well, thank you very much for listening. It's Jeffrey Cohen. To the extent that you have a comment or a question, just leave it below. Love it when you leave a comment. And then hit the subscribe button. We are not paid to make these videos, but when you subscribe, it tells YouTube to share our videos with more people. It suggests some more. And it's very helpful for us. It shows us that you care. So hit subscribe. You also can sign up for notifications so that you know what time our next video is going to be if you want to catch an early morning market view. So thanks again, and we'll talk to you later. Bye-bye now.